Hey, welcome back to Family Investment. Alex Go here, and I would like to share this will be the last episode of my bearish cycle that I've been sharing relentlessly for the last few weeks, since like 20th of February, as far as I can remember, when I noticed something really strange on the chart. And I tried to share that we've peaked, and some of this very high risk stock going 25% a day isn't right. And de-risking was one of the keys, profit taking by folks, and then going to phase B, which was faster than expected. And could we drop even lower or not? That's for you guys to find out, because I'm no longer going to share information like that, because one, it takes a lot of energy. Two, I'm actually paying to promote my videos because nobody watched it. I have to push it out so that I can reach further people to save people's portfolio. That's my whole end game. I have to pay, I have to make a video and pay for the video to get out, because YouTube doesn't really favor my channel, and a lot of energy being put in, and then I get lots of heat and hate of people online going, hey, yeah, this rally is coming out. And guess what? The relief rally, I said it on X, relief rally expected yesterday because of the bounce at 546. Guess what happened? And I told folks to remember, don't be complacent, de-risk, and guess what? Today it came down again. I'm not saying them all right. I'm providing data. I'm not forecasting the future. I'm not a super expert, but I'm just playing from experience and what I see. And it's exhausting, it's taxing, jobs going on, things going on. I've got to run a club and kids. So I thought I'll take a step back and relax before I burn out again, because I want to be here, I want to share, but I do want to burn out and get angry and such sort of thing, trying tantrum at everybody, get angry, go chicken genius mode. So yeah, this will be my last episode. So let's recap and let's share, so that I can get on with a new program, new series going forward. Okay, so let's get on with the plan. So let's just recap the VIX. I said the VIX is on a bullish trend downwards, but it's spiking up. No climax yet. Still no climax yet, okay? And if you look, that is not a climax. It still could rip up. It's above that channel. It's not normal. It's a slow choke of death. The SPX, I said again and again, and people want to argue with me, 4-hour chart. That's how I see it. 4-hour chart, it's there bouncing, it's a death cross. And that confirms it as well. People said, oh, Alex, you should use the daily chart. Go. I'm not going to debate if you go and use your daily chart. Go wait and lose another 10% of portfolio, and then agree with me. Try to show me your mathematical certificates. My maths is way better than your maths. Just shut the... Sorry. Cool, chill. Anyway, yeah, that's where I am. And Nvidia dropping down. Nvidia death cross as well. It's hopping up. Hopium, come on, guys. And if I chart the chart now, Nvidia still could drop to 90. Still Buytrigger, still great quality stock, but just be careful. Your portfolio, your family's cash, it's all dependent. Don't play hope investment, guys. You have to go defensive. Okay. Then gold is, like I said, it's going to go all-time high at 3,100, and now it's at 2,989. I'm not lying. The facts is there. The Moody's, now the bond yield is going up again, 5.35 as it stands here. I'm going to call it a sideway, but it's not over. The relief rally yesterday isn't an indicator. Go, oh, it's all great. CPI is great. I don't know where the market is going to go, but as it stands, that is not great. It's going to go. I hope that will be a showstopper. I hope they start hovering around that zone. I'm fine. I'll accept that. But don't think it's going to go or break all-time high. I think they're taking a step back. How long? 2 weeks, 3 weeks? We don't know. We just have to wait and see. You just have to de-risk. Okay? So going forward, what's really, Alex, what's de-risking? Yeah? De-risking for me is really the point where you just have to hold and rejig your portfolio a bit better to hold more defensive type stock. When I say defensive, meaning don't hold the high risk stock like this, like the Robinhood, the HIMS, the Snowflakes, and all that stuff. You can hold them, but don't make it like the majority of the portfolio, because these stocks go up 7, 8, 9% each day. That's heartbreaking to see loss. And then go up 7%, make you happy the next day, and then drop 7% the next day. But it's actually all going sideways. But that ruins your mood. It makes you angry. You have a fight with your girlfriend, your boyfriend, and you shout at your mom. That isn't great. So de-risk. There are other quality stocks out there. Okay. So on the Buytrigger, the 2.0, very proud. I just want to share a few stocks that's really jumped out for me. So some defensive stock that's great is Lockheed Martin, Buytrigger. Okay, 6.9, very close, very close. I think just pop back up again. Buytrigger, very low risk stock, about 8.8. Recommendation of 84, fairly priced. Growth is slow, but there's a reason why it's slow. And it's very rare for Lockheed Martin drop down. I've promoted to an A rating stock, and I like Lockheed Martin. And there's also another stock which, you know, I've not really spoke about in a while because I thought overvalued, and guess what? It came Buytrigger today. It's still overvalued, but it's a good Buytrigger levels, which is Microsoft. 378, a Buytrigger at 380, so it's slightly dropped below. If you pay now, you're paying the future value of year of end of this year's value, not too far off, 9 months ahead. And the risk level is 18.4, which is pretty good, not comparison to Lockheed Martin, but it's still at low because it's a staple stock at an A level criteria. If you want to venture out a bit more and be a bit more adventurous, I would say let me go check on my Buytrigger screener here. And if I want to go, let's say, Alex, I want to go mature stock. Okay, I want A to A plus. Mature stock, A to A plus. One that stands out is a Meta. Okay, let me show you Meta. That stock is crazy. And guess what? I gave that stock an A plus rating. Why? I've got 3 A plus rating, and Meta is one of them. Meta stands A plus, 590, mature growth, 25% growth, undervalued. Why? Because it's 569 Buytrigger. Valuation for going forward is 1,086. It's about almost double. I don't make these numbers up. It's all calculated through the forward cash flow, through the Graham's intrinsic, through the high bond market yield, and also the forward cash flow. It's all in there. And high risk, 44%. I recommend 95. Market expectation is at 11, meaning that it's currently at 25% growth. The market's only paying 11% growth for them just now. So Meta is great, and this is a great stock if you want to invest for your kids. Okay, one last stock that I want to share finally is let's pick a stock that's out of EU. ASML. I like ASML. Let's not ASML. Okay, ASML, a B plus. And if anybody took the strong dollar to buy ASML at under 650, which it was under 650 not long ago, check the charts, 19% growth, severely undervalued, a bit higher risk because of the volatility, because of the currency. Performance 57, recommendation at 72. And well done if you got your ASML stock. But for now, I wouldn't buy. I'll just hold because it's past its valuation already. Okay, that's one example. Let's bring another stock, and let's bring another stock just to keep the conversation going. Eli Lilly. Is Eli Lilly a great company? I gave it an A minus. Recommend at 83. It's already surpassed its Buytrigger, 790. Still under its value. 40% growth. Slightly lower than ASML on risk level, volatility, 46. But that is possibly a diversification factor. Okay? But what if you want to take a bit more higher risk? Let's say, oh, Alex, I want him. So I don't want Eli Lilly. I want something more dangerous. High risk. 31 just now. The Buytrigger is 34. It's good value. It's below Buytrigger and value trigger. But if you can take the volatility of 87, can you stomach it? Fine. If you want to take the risk, here you go. If you're young, you got a long term ahead, and you can afford to lose the money to invest, then that's a good. But if you can take the risk, you could potentially go higher because the growth is 45% here. Very dependent on the market sentiment. Yep. So this is really Buytrigger 2.0. That's what I hope to share going forward with this analysis, rather than the doom and gloom and get hated by everybody because they don't like to hear bad news. Even though I'm trying to tell the truth, I'm trying to save everybody here. Even to pay myself to get out and then spend my time trying to debate with folks, complete waste of time. But thank you guys for all those who come and support, for all those who comment. And again, the access to this Buytrigger information club that you see here is only for the club members. Both essential and premium, you get that level. You get the stock screener that I've shown you just now. And this is what I have been spending time to build and helping folks. I'm actually giving a product out there just now. So join Buytrigger. Loads of chat every time going on. I can show you here as well. I'm not just trying to sell it, but this is where I focus a lot of my time on. The chat with the members here. Okay, we set up polls. I set up live sessions every time I just finish a live session on daily chart, daily market. That is what I do. Going to a forum where folks actually wants to share and learn, that I'm comfortable. Again, Buytrigger Club. That's what I'm focusing on. Future content, Buytrigger 2.0. Thank you guys. Have a good day, and I appreciate you all that support me.